Hello, YouTube. We need to talk because there is a pattern setting up here as we are hovering around at the relative lows with elevated volume and sell in May and go away and come back on Labor Day in full force. What I'm noticing is that ever since Jerome Powell spoke, we have a head and shoulders. And every time we get a rip, it's for selling. Every rip is for selling. Bounce off the 50, sell it. Reject off of the 50, sell it. And what's so important about this is that this is very reminiscent of what was happening between, the beginning parts of January to May, where we saw that there were inflows coming in, and then all of a sudden, we were not able to make it over the relative lows, which is actually where we went down to our yearly low in June. So when people started selling stocks, that led to the nastiest month of the year. Remembering that we normally see a % decline in August and September, so this is kind of like what normally happens. And when we look here, we have to ask ourselves, are these bears going to take us even lower, back down to roughly 380? Or are we starting, keyword being starting to see some warning signs that maybe there is more downside or upside? So today, what I want to walk through is an update on all the short positioning, where we know that right now, we note that if rips are for selling and there is a massive short on it, means that they don't want to let go. They want to keep holding on. And we went over that on the weekend video. So the next thing to talk about here is the bull versus bear case. Well, as of right now, as I'm trying to understand what the market is telling me, because as a rule of thumb, I like looking at the Tuesday open, because on Tuesday, we see how the weekly chart is starting to set up. And as of right now, this weekly chart does no look good. It is no bueno. And that matters because we got the big boys back at their desks. They are trading. And if we're going to get a nasty cut, we're going to recognize some of those warning signs on other charts. So when we look here, this is the why bull or bear for the SPY, or the American Stock Index. But there's some massive problems happening around the world. The bear case here is pretty bad. Tomorrow, we're going to be getting, what do we have tomorrow? German GDP. So I don't know, is this a buy or sell? It's tough to know. But as I mentioned, I'm usually looking towards Tuesday to know what we're going to look at here. The weekly chart is already broken, which means that, yeah, the bears are in control. And as long as we remain below 390.04, which was last week's low, we now have a lower high and a lower low, which means that, at least initially, we opened flat, tried to push up, and then sold off. So the onus is on the bulls to prove to us that we are bullish. Otherwise, where are we likely going to go? Well, if you are looking at the support and resistance levels, they're right here. And one of them is a pivot. It's this pink line. That's currently at 389.75. That goes all the way back here to the low that we established on June 6th. I'm looking at this gap right here on the weekly. And if we're re-entering the gap, and this is the pivot, and we don't break back above 394, which is already our high of the week, so 394 goes back here to our relative high, going all the way back to April. That's a long time ago, April 2021 to be precise. That's almost a year and a half ago now. So if we've already kissed the level that we don't want to at 394, and now we find ourselves down here at 390, and we don't change the trend on the daily, we're likely going to go down to either 384 or down to 380.5. And those two areas basically come from the high that we established after our weekly gap down, and also our relative low on the monthly here at about 380.5. So this chart here also tells us that, hey, bears, you're winning. And the bulls, they need to show up, because decreasing price, increasing volume, that is bearish. It's classic bearish. We stopped going up, which means that our uptrend is no longer valid as of right now, can end up being a trap, but our downtrend, absolutely valid. Why? It's holding. And we got a long ways to go before we're going to break that. That's at 420 right now. So as long as the trend holds, we have to assume that objects in motion tend to stay in motion, which means that if we're now down here at about 390, it means we are now past center field, and we are now actually entering a bear territory. So the next natural target for me would be here at about 385. We've already lost 390. So if we cannot hold that level, which we'll look back here on the daily, it's going to be really, really, really important, because we could push down 10 more points from where we are right here. It's also important to note that VIX at about 25, if not higher, is implying a roughly 1.5% daily move, 1.25. So what did S&P do on the daily today? That's right. It moved about 1.3, 1.5%. Yeah, we moved about 1.4, 1.5% here. So VIX at above 25 just means that volatility here is here to stay. And I think if you're looking at the charts, you're like, yeah, volatility's back. And volatility can happen to the downside, but also to the upside. So now that we understand where we're coming from, and I explained myself in depth on the weekend, so I'm not gonna beat that drum anymore. We know 350 would be the next stop if we don't have any bullish reversal. So now that the bear case is stronger and we know the levels, what do we need to see from these bulls to get a reversal? Well, I don't know what's going to happen with this German GDP number. I think that it's very dark right now. The market is a future discount mechanism. It's discounting that not only is this year, but next year going to be very dark in Europe, right? We got a new leadership, new PM in the UK, but I think things are pretty bleak all around the world right now. And there's also rhetoric ramping up with Russia. I don't want to get into the details, but it does not look good. That's just what I'm seeing. And when I look to the tape, I'll just visually scan across here and I'll tell you what I am trying to do, because I need to decipher what the market is telling me to make a strategy to trade. And as of right now, I don't see anything investable. And by closing at the low of the week last week and doing what we are now, lower high, lower low, tells me that objects in motion tend to stay in motion. We're probably going to go lower. And if we look here to back to our daily chart, what does that mean? Well, it's pretty simple, actually. So if we're currently pointing down with a double downtrend, first one here found which is the blue line, second one here which is found also the blue line. If all we do is keep rocking that downtrend, we would have to currently get above about 397 to break that. It would be easy to say that we are, again, reversing, at least for the most acute downtrend or the sharpest one, if we can reclaim the 50-day moving average. That is also roughly our weekly high. So if we go back to our notes here and we look at what it would take for us to actually break bull, we have to get up to 406. It's a lot easier for us to cut down to 380 than it is for us to go back up 16 points right now. But it is generally darkest before it's dawn. And like I mentioned, right now it's pretty dark. I think that everyone's pretty pessimistic on what is going to happen in the next few months. And global economies are kind of showing that. Look at risk assets here. So Bitcoin went green to red pretty hard. Same thing with Ether. And when I look at my levels, it's just doing what I would expect. Even oil is down. Like, what's green today? Oh my God, no! DXY over 110, new 52-week high. VIX, not at a 52-week high, but it's elevated here. It's only in the mid-20s though. That's over 30s where we start getting elevated. So yeah, it's up, but it's not like, oh my God, there's the end of the world happening. We look at the 2-year note. Whoa, okay, not a 52-week high, but if we hold this area, it's 3.5. That's a big round number. The market is doing the work for the Fed right now. Yeah, the bond market and the stock market. So 3.5, yeah, we don't have to go a lot higher. This will be a record weekly close. We're also here over our high that we established in June, which was what? Our low of the year. So bond market's already saying, hey, I'm making a higher high. What should SPY be doing? Making a lower low. That's what it should be doing. If the bond market is leading and the stock market goes next, what is it saying? Time go down for stocks. Time go down, 362, if not lower. Oh no, is the story unanimous? Let's look at the 10-year note. Oh no! Yep, that's right. In June 13th, we set our high for the 10-year note, which was at 3.497%. We're getting pretty close to it. This is the highest level we've been on a weekly basis ever since we formed that all-time high. Sorry, the 52-week high, not the all-time high. And that corresponded with the low of the year. Oh no. And inversion's going down, which just means that, yeah, higher for longer. That's what the market's telling you, higher for longer. The 10-year note is going up more than the 2-year note. Oh no, that's right, oh no. And now if we look at a few more asset classes, so we go over here to Bitcoin, look at that beautiful daily candle, right? Oh no. It's sucking up all this liquidity we found over here, and there's no meaningful green bars, which means every rip is for selling. All right, looking at the next one, Ether. All right, so rejected off the 50 DMA. I was looking at about 1,700 as a relative high, and that's pretty much where I rejected. It's now reversed about 10%. Whoa. Yep. Apple. Apple has now got 2 daily closes below the 50 DMA, which usually leads to what? Continuation to the downside. More evidence for the bears. Oops. Let's move here to Microsoft. Well below the 50 DMA for multiple days. All right, cool. Google, yep, it's in the club. Amazon, first day below. Oh no, right? It saved it here. Sorry, it closed below by about 24 cents. It's not a lot, but it's below. 2 more days. There's more momentum to the downside. The only other one that's holding up here is Tesla. Tesla's actually green on the day. I think it got an upgrade today. So increasing price, increasing volume. Hey, Tesla looks like pretty good here. It's like one of the only things that's actually holding up. Is it good enough? Well, when the last dominoes fall, that's when it really gets bad. So as of right now, 1 day below, back above. Nvidia, multiple days below, fail, right? It's below. So now every major stock or ETF is confirming the move. What is also confirming it? Oil, red. Gold, red. FDAX. This is one thing that's a little curious here. I don't know why it's green. Does this mean that if the global recession, which is supposed to be focused in Europe, specifically Germany, what do we have? We got green vol and green price action. Yep. Is that just because of the strong dollar, meaning a weak euro? Or is there more to play here? I don't know. But for us in America, it doesn't really matter. What we care about is whether our lines are going to go up or down. And if we look at the DAX up by 0.3, the dollar up by 0.6, and S&P down by 0.3, what does it mean? They are moving together. It's just that the dollar is really hurting American stocks. So SPY would look like this if the dollar was not going higher. But even with a rate increase in Europe, US yields are much more attractive. They are higher. The US is the powerhouse in terms of the economy. We got another number to confirm that today. ISM non-manufacturing came in at 56.9 versus 55.1. Good data is bad. Isn't that what happened? Oh no, that's right. Oh no, even gold. It's not doing as bad. It still reversed its whole move, but it's got higher lows and higher highs. So it's a hedge, but Bitcoin's telling us a story too. Every $1 trillion company down. Put call ratios are roughly even. And what else is green today? Well, we got healthcare. Okay. And then we got utilities. That's about it. Everything else is red. So the theme is red. The bears are flexing. And I think the last thing we just have to look for is, I think I forgot to mention this. The only thing I'm looking for now is whether or not we're able to make progress here towards our daily gaps, because this is the area where the big short was put on, and we have to pay attention to it. So for SPY, if we form a daily lower low tomorrow and we close below 390, oh boy, we're probably going to 380 in a hurry. If we can hold up, then we're digesting these daily lows, which is when we had peak fear. And we have to reverse. There were so many puts today that all got paid. I'm talking hundreds of thousands. The video's already long enough. We don't need to look at more evidence to tell us that the charts are bearish. Their charts are telling us they're bearish. So let's listen to the evidence, let's prepare a strategy, and let's make sure that we're able to form at least a daily inside bar, if not a higher high and a higher low on the daily before we confirm we're going to be going back up. Until then, we cannot close below 390, period. And we can also not print a daily lower low versus today, which means that otherwise the objects in motion are staying in motion, and we're very, very likely going to coil up here into what? The end of September. That is where we find our bear apex at 380. Meaning, are we going to get another monthly sell going into October? Meaning, is the deep dark winter here? Or are we now seeing light at the end of the tunnel? With that said, I thank you very much for watching, and I really enjoy when you smash a thumbs up, even destroy it, and drop me a comment. We try to read every single one, and it helps support our channel to tell YouTube, go tell more people about stocks today. Thank you for watching, and I look forward to seeing you tomorrow.